What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. All right, before we even get going, I do want to say thank you to every single one of you guys watching. Last week's video, we hit 50 likes, which was way over the goal that we set. So this week, we're not even going to set a goal, just the more the merrier. I really do appreciate you guys commenting, liking, interacting, all that good stuff. So with that, we'll hop into the video. As always, in the Weekly Watchlist, I give you guys a technical analysis and some of my thoughts on the tickers up here on the left. Of course, we have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies, starting with Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. Real quick, if you're interested in receiving 5 to 10 swing trade ideas per week, then go ahead and sign up for the Swing Trade newsletter. That's the first link in the description. We're also on Instagram if you want to check us out there at tradebrigade.co, and we have a live Discord if you want to come chat with myself and other traders in real time. Let's hop into it. Alrighty, so I did go ahead and change out the candles to be filled solidly, so if you appreciate that and this makes it a little bit more visible on your phone screen or computer screen, then leave me a thumbs up and I'll know that this is a good thing to do. I'll keep them that way. As always, starting on the SPY weekly chart, you can see that we did have a little resistance up here and finally a red week after consecutive, I don't know how many months this was, 2-3 months of just going pretty much straight up. This was a quick liquidation break down to support, but you can see we finally had a red week, closed red, and it has a significant body. It's not like one of these little doji sort of indecision candles. So again, resistance up here at the all-time high around 332.95, 333 if you want to just play a nice round number. We did come back down right to support. So right now, based on what I'm seeing, there is some support that's coming into play at 327.46 on the weekly. Whether or not that breaks and sends us to our next support sort of zone down here at 323.75 to 324.80s in this area, that'll be key going into next week. So we really want to see what happens around the low of this weekly candle, which is at 327.46. Coming into the daily for a little bit more clarity here, this is sort of what I meant by that next support zone. So if this one breaks, which we targeted this one perfectly, looking for a rejection to the downside. So this was a great target to have. If you were watching last week's video, you knew this was an area to watch out for. We couldn't break out of this sort of pressure cooker that was forming here, but if we do end up getting back into this area and resistance does break, let's just cover the upside with whole and half dollar resistance into blue sky territories, as well as any intraday levels that do form. However, based on the candle that formed on Friday and on relatively large red volume, I would be sort of biased to favor the bears early into next week. So again, looking for this 327.50-ish support to break. If that one gives, we're looking for this zone to sort of come into play where we had some resistance, and then slightly below it, resistance as well. So again, that area is 323.76 to 324.80s just about. We did fill this sort of small, tiny little gap in the market. So that is the first gap that has filled. There still do remain a few of them below us. There's one down here that's still partially unfilled. Tiny gap here that remains unfilled, and the glaring gap from way back, which is all the way down around this 294 level, just about. So again, still poor structure to the downside. I don't think it means we're necessarily going to see a huge market sell-off and we're going to get to all these gaps at the moment, but just know that the first one was repaired. There are still some below us. The Qs had a significantly higher volume red day. You can see based on our volume bars down here, but it doesn't look like the move was as bearish, just relative to the fact that it did put in a new high that day. We can mark that one in as a new all-time high resistance at 225.88. There was no real target, or we didn't really reach the target we were looking for on a big sell-off like we did in SPY. So that first target below us, if we continue to sell off, which again, based on the volume and shape of Friday's candle, would be somewhere around 219.89, so 220 if you want to play a round whole dollar there. That's sort of where we had some congestion before making another move up. If that one gives, similar to SPY, we have this sort of web below us at 216.16 to 214.50. Again, that's where some of these resistance points are coming into play, and just slightly above that resistance as well. So keep that in mind as a target to the downside. 50 SMA is starting to catch up to that area. So again, that's quite a ways away, and that would take quite a bearish reaction. So we'll see what happens. Again, if we get into blue sky territories and go in the upward direction, it's whole and half dollars, as well as any intraday levels that do form. IWM, the small caps, you can see are suffering a bit more with more of a dramatic pullback here. It wasn't a couple sideways days and then the pullback. It sort of happened earlier on in the week, and we've just had a nice red week. So we did come right back down into support and found that support as noted by this sort of lower shadow here on Friday's candle. Again, volume increasing there on the bigger of the red days, so that is something to note. We are getting closer to that 50 SMA, so at this point, maybe it does look like we come in for a little kiss to the 50 SMA and then see some sort of sideways action. The market is really going to be driven early on and into next week based on all of the FANG and tech earnings that are going to be happening. So that, like I said, will be driving what direction, whether or not those are positive results or negative results, the market goes. So keep that in mind. Again, this could just be sort of a big pullback based on news. There was the whole virus thing going on in China, so market could be reacting to that, but we will see ultimately what happens when the numbers come out in earnings season. For IWM, anything overhead, we do have this sort of resistance area based on this candle and sort of this area here. That's at 167. Anything higher than that is sort of this congested area where we do see resistance. That's at 167.89. Anything lower, we're looking for support. Again, that's that 50 SMA. Lower than that, and we're looking at 162.33. There's a small partially filled gap that remains to the high of this candle. If that fills the high of this candle and the gap close is at 161.65. Alrighty, if you guys are enjoying the analysis so far, then be sure to leave the video a thumbs up. Again, there's no goal for this one particularly, but again, the more the merrier, and the YouTube algorithm does appreciate all that stuff, and I do as well. So without further ado, let's get into Apple. So Apple's uptrend remains quite strongly intact. You can see we did print an inverted hammer candle here on Friday at the new all-time high, which is at 323.33. That to me would be a bearish indicator. However, just based on the fact that earnings are coming up, especially if we're going to be playing this one with options, premiums will be inflated, and as soon as options come out, they will deflate, and even if you get a big gap one way or another in your favor, then you could end up losing on the options just based on implied volatility. So something to keep in mind. Again, I'm not holding my breath until after earnings. If we do see any sort of movement to the downside, we have our supports mapped out for us. 312.45 is sort of our first area of contention on the chart based on some of these interesting highs and lows as its support. Anything lower than that, and it looks like we'll probably get into our trend line before we get into our next horizontal price level. There is still a small gap here that remains on the chart, so in between the high of this candle and the low of this one, that gap fills to the high here at 304.44, so something to keep in mind there. Let's just mark that off to have that in the back of our heads in case price does approach that area somewhere in there, so that'll serve as a nice reminder. But again, I think the trend line will come into play, if anything, on any sort of major downward action. Again, the uptrend is still very much intact, putting in higher highs and higher lows as we continue forward throughout the year. So Netflix sort of surprised everyone. It did have a down day after earnings came out, you can see here, but then on Thursday, Friday, it recovered quite nicely, which is surprising considering what the market did. So the relative strength on Netflix is pretty high right now, so depending on what the market does, Netflix may be one of those things that you turn to if you're looking to go long, if the market is selling off, as it's shown some relative strength here. Again, nice wick here on the upside of Friday's day, almost there to our 361.79 resistance, so interesting as to whether or not that means some stronger sellers are coming in closer to that price level. We'll sort of see what happens as this one goes sideways. Again, really nice green volume here, so I wouldn't quite short this one until we really see some stronger sellers emerge, and then possibly a play for puts there. But if we do break out over that 361.79, our next resistance level based on our previous markings are at 386, the whole dollar just about. Anything to the downside, we have this sort of zone that we could target. So support first coming into play at 343. Anything lower is 338. And if that gives, we are targeting sort of our moving averages, which are starting to converge, and our sort of lows of this consolidation, which is at 321.21. Tesla has just absolutely been parabolic, going out of control. Huge volume, though, to support all this movement, so it'll really be interesting to see how this one plays out with earnings coming up. Again, these sort of candles up here would normally indicate to me that stronger sellers are emerging. You can see our new all-time high didn't even hold that day. It was just a straight sell-off once we shot right up to it. So that's at 594.50, just to keep in mind. But we are seeing now, which is kind of contradictory to the formation and structure of this candle, are some hammers here where buyers are stepping in before this gap has even closed, which I think is really interesting. So we gapped up over the previous all-time high on news this day, or just continued momentum to the upside. So right now, if we are looking for a gap fill, it's at 547.41. That's to this sort of double top here, which we gapped up over. But right now, it does look like the buyers are stepping in prior to that, which is a bullish signal, in which case I would be targeting the all-time high should we see any sort of positive swing out of earnings. But again, I really don't want to play this one prior to earnings just based on the fact of how volatile it can be. Baba is seeing more of a respectable pullback. You can see that after this nice move to the upside, we are coming back down and testing some of our supports and breaking through them. On Friday, we did see support hold up as the close did close above our support level here at 213.14. If we see any movement or breakdown below sort of this area, we actually sort of have a web here where we have support here and here. So if that breaks down, we would target our 50 SMA as a first touch bounce. If that one gives, our next really area on the chart to pay attention to is $200.71. You can see that's where we've had high resistance, 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 resistance all these times in the past. So that would be an area of structure on the chart to target to the downside. If we see any sort of reversal out of this area, we're looking for resistance to come into play overhead at 218. 219.82, so on and so forth, as we have them marked off for us on the chart. So Facebook's magic trend lines have come into play once again. I knew I left them on there for a reason, even though they've been violated once or twice to one way or another. You can see that we pulled back right into the level, and now we are bouncing out of it. Big tail there on Friday's candle, but also, again, some solid red volume just comparative to, when we see some consolidation in the past, the volume sort of in this range. It's slightly higher. And we are moving sort of more with more magnitude here. So looking for support if this does break. Quite a ways away, we have a level that's, if you want to consider the tail of this one here, support that's at 211.75, but really the next area of structure on the chart for price to go and gravitate towards would be around 208.33. So quite a ways away if this sort of support trendline convergence gives. On the upside, if we do see a swing out of this and a bounce on positive earnings or some sort of news-driven event, then we are looking at resistance to come into play at previous support, which is at 220.23. Anything higher than that, it's going to be this all-time high sort of pressure cooker that's forming right at 222.75. If that gives, I could imagine a nice breakout, just given the fact that all these touches here would be building pressure below. Boom, we get past the trigger point and the move happens. Nvidia had a gap up, but the gap filled all day and red volume flushed in with the market being red. No surprises there. However, Netflix, like we did say, had some relative strength to the market. Let's just look for a move from this sort of area of support down into our next sort of horizontal level, which is at 241.26, based on the fact that this is a full-bodied red candle on higher red volume. So I think the sellers are pretty strong here. Depending on what the market does, again, this question mark is earnings. That's quite a ways away compared to everything else, but that's 213. After the market closes, we can mark in this resistance point here at 259.50. That'll be an area of contention should we see any sort of major swing out of this consolidation. There's sort of this thing that's happening, which I'm just noticing now. So if we get our trend line, we could sort of draw something in like that. And you can see that if that gives, boom, that puts us down here, like we said, at 241.26. If we see a bounce, again, resistance is covered on the upside. Anything lower than this 241, and that'll be quite the market move to the downside here for Nvidia. Really, we're targeting 228.85 in the longer term and our 50 SMA, this blue line here, which should be in that area. So Microsoft has earnings as well coming up this week. We have a pressure cooker forming here at the all-time high at 168.19, just slightly below it actually, if you want to call it 167.50. If price can get past that trigger point and past that all-time high, then again, pressure forming below should propel prices upward quite nicely. However, right now, based on the candle and sort of what the whole market is doing, again, higher red volume, looks to me like we should target our next resistance or support below us, which is at 163.12. Anything lower than that, and our next stair step below is at 160.69. Lower than that, and our 50 SMA and sort of this support web. Also, there's a tiny gap here that remains partially filled. You can see that these lows don't quite get down to the high of this green candle here, so small partial gap that remains in the chart here that fills at the high of this candle at 155.77. Something to keep in mind. Again, that's quite a ways away. Our rising support trend line and 50 SMA should save the day before we really get into any of that. Again, earnings coming up here on the 28th, and I think that is also after market closes. Amazon has continued to sort of consolidate and go sideways. We were looking for the breakout over this level here at 1887. We sort of got the fake breakout to the upside, in which case we targeted the bottom end of the range. So beautiful play there, seeing the fake breakout, recognizing that, and then getting the full move we were looking for on Friday, cheapy Friday if you got in. Fantastic. Right back down to our support sort of web here. So right now we're going to look for a breakdown out of this support zone. Normally when we see some consolidation and balance like this form, again, we're looking for a breakout to the upside, in which case we double the range to the upside. That would have been right here to 1916. If we get the fake breakout, we target the other end of the range, which is the lows here at 1858, which we did see, and then we saw a move down through it. So right now we're looking really for a breakdown of this support zone, in which case we're targeting our next level below, which is at 1833, and then continuing to sort of double this range to the downside. That would really put us more along the lines of 1824. That does mean that we will come into play with the 200 SMA, and again, earnings should be a catalyst for this to happen one way or another. If we see the fake breakdown, again, we're targeting the upside of the range, and we could just essentially go sideways in this forever until something really does happen. But I think earnings will break us out one way or another. Everything is covered to the downside. To the upside, again, 1916 as resistance to be our sort of focal point should we see a big gap up. Anything higher than that is 1950. And again, should we really see anything really crazy happen on Amazon, it's 2040 as our sort of pie in the sky resistance. So keep that in mind as well. Alrighty guys, that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video, again, leave it a thumbs up. Let me know down below in the comments. If you liked the filled in candles, if they showed up better on your screen, let me know in the comments section as well, and I will continue to leave them filled in. As always, I wish you a green trading week. Watch out for earnings this week. They should determine which way the market will head as a whole.